Welcome back, everybody. It is Tuesday night, and this is Vetted VA Live. Sorry, we're a couple minutes late. Everyone was here and ready and prepared, and I had technical difficulties, so we got to restart the computer and get everything going smoothly. So, as usual, we are joined by three vetted pros to go through a topic of interest to you. Tonight, we're just going to talk about one of the things that comes up super frequently in the group that people say, hey, want to buy a house. I have no idea where to get started. I want to get pre-approved. No idea how I do that. Want to find a realtor. Where do I even start? So we're going to go through starting that process. We're entering, the home stretch here for 2024. A lot of people have decided it's not going to happen this year, but big New Year's plans, new year, new you, New Year's resolutions. So if you are thinking along the lines of getting going next year, buying your first home, or if you even want to squeeze it in here before the end of the year, we're going to go through everything you need to know to get started, tips and tricks from these vetted pros here of the ideal way to make sure you get off on the right track. Most importantly, we want to answer your questions. So if you're here, you're watching in the Facebook group, anywhere else, throw a question up in the comments. We will absolutely circle back to them. So I want to welcome everyone. I've got Nathan Einkorn out in Colorado, mortgage loan originator. Stephanie Southholm over in, is it Oahu? Is that correct?
Yeah.
Oahu. And then a slightly different location than Oahu. Jessica Wells is in Olympia, Washington. Did you get the balmy tropical summer weather today in Olympia?
No, it was a little less than tropical here. A little bit rain.
A little less than that today. Well, let's jump in and let's kind of start with something that, for the most part, is pretty simple, pretty easy. Stephanie, if someone comes to you, a veteran, and they don't even know, I think I'm eligible. I served. How do you start that process of just making sure that they're eligible, they have the certificate of eligibility, and getting things off on the right foot from that end?
Yeah. So that first step, of course, is for me to pull your certificate of eligibility. A veteran or service member can pull it for themselves, and I can also walk someone through doing that. We have, I think, the links on many places in Vetted VA, but we could also put it in the comments here. But when I pull a certificate of eligibility, all I need is social security number, date of birth, and it will let me know if you have entitlement to use the VA loan or if we need to submit some additional documentation to have that reflect on the certificate of eligibility. Sometimes we have to problem solve and troubleshoot to get that entitlement reflecting properly.
How common is that for you guys? It's from less than 10% of the time, would you say? Probably about 90% plus. We're able to jump right in, have it immediately, and see what's there. Nathan, when you get that certificate of eligibility, what are you looking for a veteran, just to make sure that everything is in line and we're not going to have any issues with that financing?
Just the amount of entitlement that's remaining. That's the first thing. We can also see if they're exempt from the funding fee or not. And kind of that gives us, where we can start. If they have full entitlement, super simple, rock and roll, good to go. If they had previously used, their VA loan on, at the last duty station or a previous home, then we have bonus entitlement, and we just do that, very simple bonus entitlement calculation to figure out what they qualify for with 100% financing, and then whether or not, any down payment may be needed if the purchase price of the home is over that 100% mark.
And if what he said is totally foreign to you, we did an entire episode on that secondary entitlement. So if you have already used your VA benefit, you're not selling that property, you still have that loan on there, you may be able to buy with zero down. You may be able to buy with a small down payment. So go check in the YouTube channel. We have a whole library of shows, and we went through that a whole hour on secondary entitlement, how to calculate it and determine. Sort of a pitch for another episode that we did there is the folks that are kind of generally more likely to fall into that category of the 10% where we may not get their certificate of eligibility is guard and reservists. So we had a whole episode on that. So if you fall into that category, you're wanting to know about your eligibility, getting a certificate of eligibility, go to the Vetted VA YouTube page, search for that episode to give you all of the details that you need to know. One of the first steps that I like to tell people, let's say you are thinking first quarter of next year, you're waiting till spring, summer buying season. One of the things that everyone can be doing right now is optimizing their credit. So from that perspective, Jessica, you have any thoughts on how you're advising clients that are maybe 2, 3, 6 months out of what they can be doing to put themselves in as good a position as possible once they do get started?
Yeah, I always encourage everybody to make sure that they monitor their credit report, because I think there's a statistic, something like 90% of credit reports have at least one error on them. So it's good just to monitor that. But then you can also see where your score is currently at. The go bag that's in Vetted VA will give you a free personal credit report, and it will give you some tools of what you can do to manage that. I always tell people, if they've got a lot of credit card debt, that one thing they can start doing is getting that balance paid below 50%, or at least 50%, if not below 30%, to get your optimal score. Make sure you don't have any late payments reporting. You don't have any collections from stuff that's popped up that you don't know about. But always talk to your lender when you're going through and cleaning up stuff on your credit, because there's some things that we don't want you to pay. Say you did find a collection from 3 years ago from your Comcast account that you forgot when you moved last time. You on that right now will actually make it reactive, and it will probably drop your credit score more than bring it up. So make sure you're talking to your lender about what you want to do on your credit report, because going out and paying on things might not be the best answer for you if you have old derogatory stuff. If it's new stuff that you can take care of, then definitely, but always run it past your lender just to make sure that you're not hurting yourself more than helping yourself by thinking you're doing something.
And that's one of the things I like to tell people. A lot of times people reach out to one of us and say, I don't know if it's time to talk. I'm not ready to buy now. But the credit is probably the biggest piece, that it could take a month. It could take 3 months. So even if you're 4, 5, 6 months away from being ready to do something, one of the biggest benefits of talking to a lender on the front end is being able to get some advice. 9 times out of 10, people that are coming to us have credit that's good enough that maybe it's a little bit of advice. Hey, let's pay that down. You should get a boost on the credit score. We can do a what if analysis and that type of stuff there. Sometimes it's above our pay grade. Sometimes I'll get stuff and go, I think this is fixable. You know, we all have vendors that we work with that work in credit repair, and it does end up being sort of a shady part of the industry. There's lots of places that would be happy to just take your money and not really get you the results that you're looking for. Stephanie, Nathan, something there. If someone comes to you early, how likely are you to use a soft pull or something along those lines versus the full hard credit report? I know we get a lot of people. I was talking to a veteran earlier today. He's really not ready to go, probably 3-6 months from now. And from that perspective, he's looking at it and not wanting the credit report pulled. Is that a tool that either of you guys use?
Yeah, I use soft pulls. It really just depends on the situation, right? If they monitor their own credit report and all of that, and they think they know what's on it, then I'm okay doing a soft pull. I think as long as people know, we can't do a full pre-approval with just a soft pull. So in order to us to run our automated underwriting system and to get this little, result that says approve, eligible, we have to do a hard pull. And so if someone's 6 months out, yes, soft pull is probably the way to go. If someone is 3 months out, I would probably recommend a hard pull, but that's something we have a conversation about for sure.
Yeah, it depends on their, I found most people are aware of their credit situation, right? If you have an honest conversation and they know they have lates, or they know they have a collection, or they know they have this or that. And in the end, the first thing I always explain to everybody is, the hard pull is the way to go. Like, I'm sorry, like soft pulls are great, they can be used, but the hard pull is the way to go, because the hard pull is what matters, right? I've seen scores change on soft pulls. I've seen information, data not, because typically a soft pull is one bureau, right? So now you got things reporting on one bureau that, but they're reporting on other bureaus, but it wasn't the bureau that you pulled. So I think the most important thing for all the veterans and anybody watching this to understand is that when a hard pull happens, I feel like there's this stigma out there that people are like, it's going to ruin my credit if you do a hard pull. And it's not. It absolutely isn't. It's from what I've seen, it really depends on the score that you like. How good is your credit? The better your credit is, the less it affects you. So if you've got a 740, 750, and we do a hard credit pull, it's like 2 or 3 points, maybe, right? Maybe 4, and that's not a game changer for getting you approved. On the bad side of that, I think I've seen the most I've seen, and it was because it was pull to pull. This was like a 90-day window, but a client where we pulled once and then we pulled again, it was like a 9-point drop, right? And even that is not great. And so, I'm not sitting there advocating go out and get a bunch of hard pulls on your credit, but at the same time, I do want to kind of dispel that myth that hard pulls on your credit are like this evil, hurtful thing that's going to ruin it. And, oh, I didn't qualify. No, trust me. If the hard pull is never going to be the thing that kept you from qualifying for a mortgage.
Yeah, the other piece of that too,
And that gentleman that I was talking to earlier
Okay.
we're all talking over each other today. I was
well,
just gonna say,
I'm hoping it's not weirding you guys out because my camera is still freezing up, so it's a little hard when you can't see someone's face or they're out of sync. So I'm gonna do my best to keep the conversation going and stay out of you guys' way. But with that, what were you saying, Jess?
I was just going to add the one other thing that people always think too is that when they go shopping and have multiple lenders pull their credit report, it's going to affect them with those points each time. But the credit bureau has, or the credit algorithm has, that deduplication process. So you're allowed to go shopping for a lender and have it pulled as many times in 45-day window. Now, if you go outside of that 45-day window, then it's a new hit and a new pull of your account. So just because one lender pulls a hard pull, you can have several more pull it in that same time frame and not have any new dings on your credit report also.
Well, maybe one other thing that we probably should talk about in that credit space, if you're going to have someone pull your credit, and the hard pull, not the soft pull. But Stephanie, you want to talk to the viewers about trigger leads and maybe what they can do to not have their phone explode the minute they have someone pull their credit report?
Yeah. So trigger leads are when the credit bureaus sell your information or the fact that you had a credit pull done for a mortgage. Because when we pull your credit, the credit bureaus know we're pulling it for mortgage because there's a certain mortgage score that they're pulling for. So there's lenders that have paid to get the leads that certain people have had their credit pulled for mortgages. Those are called trigger leads. So what happens to our clients is that when they go to, do a hard credit pull, within minutes, they are getting phone calls, texts, emails. And it's sometimes hundreds phone calls, text, emails. There's a way that you can sometimes not stop it completely, but definitely reduce greatly the trigger leads that you're going to get. And that is by going to optoutprescreen.com and submitting your information. You should do that before you start shopping for a mortgage or start talking.
You should just go do it right now, whether you're shopping for a mortgage or not. Just go on that and do not call.gov. You should go to both of those sites and register. It'll cut down on your junk mail. It'll cut down on your spam calls. And trust me, we try and do everything that we can on our end. There's so many myths about that, like removing phone numbers, removing emails, it doesn't matter. There's really nothing that we can do to stop it. Trust me, if we could, we would. I had a client, she got 62 phone calls in 20 minutes. And I pulled her credit at 7 a.m. in the morning. And we did it intentionally, hoping that it was going to prevent it from happening. They don't care. They don't care. I think everybody knows how I feel about our trigger lead people. Yeah, but yeah.
And they're trying to get your business. They're calling you to get they're sometimes calling and using language that's confusing, like, oh, I just got your file, or oh, such and such I'm with such and such mortgage company. They actually sometimes lie, but their goal is to trick you to work with them for the mortgage. It's crazy.
Yeah, because they know you've had your mortgage credit report pulled. So a lot of times the language is, hey, I was just calling you back about your loan. And they'll pick up and start asking you questions and try to complete a loan application, or they'll tell you they're with your lender. We had someone here on the show that literally they did their own refinance a couple of years ago, and they were not on opt-out pre-screen. And within like 20 minutes of pulling their own credit, someone called and said, hey, I'm with your lender. I just need to get some more information. And she played along for like 20 minutes. And this guy just lied his whole way through it, tried to get a complete loan application out of her. And it's not just phone calls. I wish I had the screenshot here. One of my borrowers sent the whole list of texts, and it was one of those scrolling screenshots, and it was probably like 20 inches long of just text one morning after that happened. So you do want to have the ability to check terms and shop for your loan, but you want to be in control of that and making outbound calls. You don't want 9 million people bothering you all day with their consistent script that they can get you better terms when they don't have any idea what terms you have, but magically they can always promise to get you better terms. So the credit is a really big piece of it, and it's something that is definitely not a bad thing to get started as early as possible, just to make sure you're optimized. Another thing that I think we all like to go through is, even with a zero down loan program like VA, most of the time our borrowers are going to come in with some money to close. So wanting to make sure that the borrowers are prepared both for cash at closing and cash when you move into a new house. It's maybe hard for some people to believe, but buying that home and getting in, just furnishing it, buying, paying for minimal repairs can cost a lot of money. So in terms of preparing for that, Jessica, what do you advise people who are getting ready to buy in terms of money, assets, and getting prepared for closing?
It's really common around here to have the seller cover all your closing costs. So that's something that can be negotiated in, but that doesn't mean there's nothing coming out of your pocket. That means in the beginning, you're going to give an earnest money deposit with your offer. Some states do contingencies or some other kind of deposits too. So you have a deposit that you're going to have to make. That's just like your good faith deposit to the seller that you really want to buy this house. You're always going to want to do a home inspection, and that's on your own dime. When you do a home inspection, that's something that you're going to have to pay for. Some states require other inspections that you may not have negotiated for the seller to pay on your behalf, a pest inspection or whatnot. So there's always a couple $1,000s that's due. And even if the seller does agree to pay your closing costs, there's a chance you could get your earnest money back after closing, but you still need to make sure that you have at least money set aside for that. And, make sure you have money for your moving and all that stuff. The new broom that always goes missing when you move and have to buy another broom. So
Can opener.
yeah, so there's always some cost to it. You can get into it with the zero down, but you are still going to end up with something out of pocket. So make sure you have some money set aside. It's not usually, it doesn't have to be a lot, but you do have to have some. And I always like to tell people, I don't want to make them house poor. They need to keep some reserves and make sure that they have money for when the water heater goes out or something like that too. They always want to have a little reserve savings set aside too, emergency fund.
We also get to this point in the year, and this comes into play in terms of getting pre-approved and getting ready to go. It's a time when a lot of people do make job changes. Going into the new year, they get a new offer, want to wait through the holidays. Stephanie, any advice for people in terms of, even if it's a better position and moving up, what do people need to be thinking in terms of their preparation if they're going to be making job changes, job promotions, any of that stuff?
Well, first of all, you don't want to make those changes after you put an offer in on a home, right? Because we've already calculated your mortgage and your, monthly payment and all of that. We've calculated everything. The loan is set and ready to go as if you were in your current job. So no job changes during the transaction. However, let's say before you get pre-approved or while you're in the pre-approval process, you decide you want to change jobs. Now it depends on the job type of job, right? How long have you been doing that type of job? But in many cases, we can use an offer letter as income, right? Still do, of course, verify with your employer that you will be making that much money and you will be transferring. In some situations, we're going to need 1 month of pay stubs of you going into that job. So it really is just going to be dependent on the type of job. What is it, salary or hourly, all of these things. But yes, it is possible that we can use an offer letter or a change of job situation.
I don't know if this has been you. Talk to your lender. And I don't know if this has been you guys' experience or is it just mine. The people that ask are the ones that are going to be fine. They're like, hey, I just got a 50% raise and a nice new job title, and it's the same company, but is that a problem, or do you need to tell them I can't have this extra money? Those people always ask, and the answer is, hey, you're going to be just fine. The guy that doesn't ask is, hey, I was a teacher and now I want to be a cop, and I want to take 4 months off and go on vacation before I do that. So it is one of those areas where you absolutely want to go through it with your lender. For most people that are thinking about it, asking about it, they're fine.
Just to touch on that, promotions within, that is mostly, right? Usually it is safe. But oftentimes promotions can come with pay structure changes. And that's something to be aware of as well. I've had clients that have gone from, an operational role within the same company, and then they moved into a managerial role, and now they have, maybe a lower base, but it's tied, they have bonuses tied to performance, things like that. Right. So what you said, usually if the people tell you about it, it can be mitigated, but it is one of those, just going back to why it's so important to get started so early. The earlier you can get started, the better, because then we can mitigate all these things that may or may not be happening. Like, hey, I know that I'm going to be due for promotion, especially for some of our active duty, right? When they know, hey, I'm going to be an E7 here pretty soon. Okay, well, here's your qualification at E6, and here's your qualification at E7, because they're different, right? But their pay structure doesn't necessarily change as much as, say, in the civilian world, where people are going with that. If they do get those bonus, if your income goes from out, even if you're hourly, I had a client one time that was hourly with a ton of overtime. They had like 5 years in that role, and then they moved into management, and they took a pay cut, right? Because that, there's no overtime anymore. Now they're base salary plus bonuses, but we can't use that. It just goes back to kind of what Stephanie was saying. Just talk to your lender, like, let us know. We got to know all the things, because they do matter.
Well, Nathan, maybe explain that, because that's hard for someone to understand. If they go, hey, I work a lot of overtime. Last year I made $100,000. I do have a management position. Yeah, I'm only going to make 75, but my bonus should be 50. So I'm going to be making 25,000 more. I mean, I'm sure we've all had this conversation 1,000 times. Someone's telling you I'm awesome, right? I just got a $25,000 raise. So from a lender's perspective, why don't you explain for anyone watching why that's problematic, despite the fact that 12 months from now, they are going to have made, 25% more in that scenario than what they were currently making.
In the end, it's all about risk mitigation, right? That's it. That's all that lender, that's all that underwriter, that's all these guidelines that we have to follow. All the rules within lending are all about making it so the bank is taking as little risk as possible by lending you hundreds of thousands of dollars. And so it's not like a small credit card thing or even a car payment. It's, here in Colorado, we're $500,000-$600,000, is our average for our homes here. It's a lot of money. So what the lenders are looking at is not your future potential. They're looking at your consistent past. That's why we talk about going back to credit. We talk a lot about credit scores and how important they are, but credit history is actually, just as important, especially with VA loans. It's one of the best things about VA loans is that you don't take such huge hits for having a low credit score. If because sometimes, we all know one late payment can just destroy your credit. I mean, it's crazy what I've seen. I recently had a return client come, and they were 780 plus FICOs. I mean, awesome. It's like the third time I've worked with them, and they had this promotional gimmicky thing that she signed up for at like one of the Ulta, or I don't know, what the hair product place, right? And got a thing and just forgot about it. Like, just totally forgot. She bought some stuff and didn't make a payment, and it rolled into a 90-day late because she had no idea. Yeah, these people, their scores dropped down in the mid sixes. And that's a big difference. So, but going back to, like I said, it's what we're looking at is the consistency in pay. So if you show a history of, tons of overtime, well, we can use that. But when you change positions and you change how you get paid, now you're starting over. You don't have a history of that anymore. So what are they going to do? They're going to go with that base income. They're going to go with the safest guaranteed income, because bonuses, they're not guaranteed. That word bonus makes it so it's not guaranteed. Even if you get a verification from your employer that says, no, we're going to give it to them. Awesome. Then don't call it a bonus. Put it into salary. Because as long as it says bonus, it's called variable income, and that just changes how we calculate. So we have all these different ways of calculating income for self-employed, variable, base pay, hourly, right? It's just all that stuff. So when those things change, it changes how we can approve you.
And another thing that comes to mind too when you're talking about that is I've seen people get like a second job because they're like, oh, I'm going to make some more money so that way I can buy a bigger house. Well, that's great that you're bringing more money into your household, but again, you have to have a history of it. The VA wants to see a 2-year history of you working those 2 jobs. So just like your bonus, you're going to have that for at least a year. You're going to have to work 2 jobs for 2 years before that even matters. So it's really important to talk to your lender. I had somebody that just last month had been a teacher for 4 years. She's been teaching full time out of college, no problem. Her school shut down that she was working for, so she took a permanent substitute teacher job. So she's in a classroom for the whole year, but because it's called a substitute teacher job, she can't use it because it's considered a non-permanent position. So we've tried and we can't even use that. So just make sure that if you're making any changes at all, to talk to your lender, because something like I wouldn't have known that substitute teacher, that's a permanent substitute, was going to be a problem until I personally ran into it. So just always talk to your lender. We'll learn something new sometimes too.
So in terms of preparing, getting ready, so thinking, where do I start? What should I be thinking of? We've covered a bunch of ground. Dial in your credit. Think in terms of what your job and employment is. Think of where your assets are. How much do I need? How much do I want to have left over when I move in? But in almost all of the answers here, it kind of circles back to starting with talking to a lender. And the funny thing is, we don't have any of the vetted realtors on tonight, but if someone starts with a realtor, they're going to have a conversation. Well, cool. What would you like to buy? What do you think your budget is? And real quickly, that conversation comes to, have you been pre-approved? Because now it's like, great, we know what you would like to do. What are you able to do? So I got a couple of important pieces, but before we kind of move along with that, do you guys feel like there's anything else that we haven't covered, that if you're thinking about buying, wanting to buy, maybe you have or haven't talked to a lender, what does a borrower, a potential buyer, need to go through in their mind to make sure that they're really ready to step in and buy? Any thoughts on that?
You just mentioned something about assets, and that triggered triggered something for me. So sourcing funds.
Yeah.
I've seen an uptick in this in the last probably last 12 months, but cash is not our friend. We have to be able to, where any funds that are going to be used for this transaction have to be sourced. We have to know where they came from. And so we call it mattress money in our industry, but the cash that you have in your safe, the cash that you have at your home, if you know that you're going to be buying, we need to be able to source that. So, we would love for you to deposit that money into an account, a verifiable account, checking or savings, whatever it may be, money market. It doesn't matter, but it has to be tracked and it has to be sourced. And that also kind of reminds me of gift funds, because this is happening a lot as well, where we're getting family members helping you to purchase. We have to be able to source those funds as well. So when you're getting help from family with your closing costs, with your purchase, wherever it's coming from, just know that you can't bring cash to the table. We have to be able to source the funds and where they come from.
Yeah, with your deposit,
So
money,
you
do that during the transaction either. So don't put your mattress money in the bank randomly on day 3 before closing, because that could cause an issue also.
Well, let's talk about another set of assets. And it's funny, the older clientele is more likely to have a few gold bars around the house, and the younger ones have crypto. So these again present issues. We had in the headline 6 months ago, Costco is selling these little $2,000 gold bars, and they can't keep them in stock for whatever reason, whether it's inflation, just the election coming up. People are like, I'm going to hoard some valuable assets here at home that's not paper money. So we have more folks with gold, and then the younger folks are comfortable with crypto. And it's not uncommon. I know you guys are seeing the same thing. You have a younger borrower there. I got 25 grand. Well, cool. Where do you have it? I'm in my Coinbase account. So from that perspective, both of those present unique issues to us. So Stephanie, say grandpa comes to you and he's got, $25,000 of gold bars at home. Do we have any advice? Do we have any workaround for that? What would we do to be able to source those funds?
Well, I've actually never had anybody come to me saying they have gold bars, but so I don't even know the answer to that question. But I'm assuming you would need to have some sort of verifiable information that it exists, whether it's deposited into the bank or something. But I actually don't know the answer to that question.
So this happens in Colorado.
Okay.
Believe it or not, it's fairly common. We have a lot of we have a large that community is very prevalent here, and it goes back to, I mean, honestly, gold is the same as cash. It is. Gold. It's a physical commodity. We can't work with those. It has to be converted and put into the bank and sourced. So can't bring gold bars to close. Crypto is actually, that's, VA hasn't come out and I haven't seen a circular on it. So if there is one, someone can update me, let me know. I think crypto stuff is really lender to lender, because I know that we do have a couple lenders out there that are they haven't also made it black and white. I know Fannie and Freddie haven't either. So it's kind of how it needs to be converted. Can we use the statement showing the crypto account, and then, do they have to get that cash now, or can it be cash during the, can it be converted during the transaction? And what I found is that's a lender to lender overlay.
Yeah.
And that's a really good answer. But the piece that I like to tell people, it seems like the crypto folks are like, I've been doing really good in my crypto. I'm going to wait and I want to pull it out 2 days before closing. So not only does that not really work for us, crypto is also known for being spectacularly volatile. So you don't want to say, hey, I got $40,000 in my account and I only need 25 to close. And the day before you close, even if you could do it, it's not unheard of for a crypto asset to drop 50% in a trading day. So it's one of those things where think in terms of getting it converted to dollars, which is going to happen at some point, and doing it earlier rather than later. A question that we had today on my podcast, we did an episode basically about the results of the election. Not that anyone cares about the results of the election, but the president-elect has some plans, some ideas of what he's going to do around housing. And we were walking through how this is going to impact potential buyers. And most of the questions just literally came back to, this was going to impact whoever won the election, is affordability. And affordability, we have some flexibility on the VA side because there's technically no max debt to income ratio, but that doesn't make it any more affordable. Just because we can get you qualified for more doesn't make it more affordable. But the unique piece to me is when things are expensive, people are worried about prices being at a peak. And when most of our veterans don't put any money down, do you guys have any advice to someone saying, hey, I got married, we have a kid, we're going to be here for a while, we would like to buy, but we're nervous. What are you guys advising your veterans, just in terms of where the market is, with prices at a high level and affordability being difficult for most people?
I'll say, it always comes back down to, like, what are the client's goals, right? Is this a PCS house, right? Is this a house they're going to live in for 3 years? Is this their forever home? Is this something they want to buy and hold and then rent? That conversation will help lead, like, what is their, I can help give this some information. But just like, this situation might not be good for everybody, right? If you're going to hold on to it 3 years and you're moving into a neighborhood with low appreciation and we're volatile and the client is risk averse, right? It might not be the best option for them. So it's really about a conversation about their goals. At least that's what I think.
Yeah, how long are they planning to stay there is a huge piece of it to note, because in my area, we've seen really good appreciation. So there's not very many places around here that you don't buy a house and in 3 years you've gained at least 10% equity type situation. We've got some really good appreciation in most of the area around here. Now you go to the other side of the state and you don't see that kind of appreciation either. So I really want to take a look at the market. We have some reports we can run to see in the area that they're buying in. Is that going to be something that's going to appreciate, or is it something that's not? Because especially when you're doing 100% loan and you're only going to live in it for 2-3 years, are you even going to have enough to pay the seller's cost at that point, if that is your plan to sell it? You don't want to get yourself into a backward situation where you're potentially owing money to sell a house.
Yeah, I know it's, very cliche and it gets said all the time, but you are paying someone's mortgage. You can pay yours or you can pay theirs. And in the end, it comes down to math. Every market is different. So it's definitely, this is something where I definitely involve the realtor, the real estate agent so they can do the market analysis and things like that. But, here in Colorado, I mean, we have an apartment community that's not far from us. And, a 3-bedroom is almost $3,100 a month. Right. I mean, that's a lot for sharing walls and, but going back to, what Stephanie said, it's what's their goal? What are they trying to do? 9 times out of 10, we all know the benefits of home ownership. It's not just financial. There's so many, studies about just, having the security for your family, having that control, even if you're in, if you're in a 30-year fixed rate, you, for the most part, have a fixed payment. Your homeowner's insurance and property taxes are going to vary, but those are, you can plan for those. Whereas, if you are living in a rental situation, your landlord, they have control over that, right? Their financial future is what they're concerned with. When you own the home, it's your home and it's your financial future. So, I don't know. I always lean. I grew up in just multiple apartment communities and didn't have a home for own a home and for most of my childhood. And I can say just my personal experience, having a home, having a neighborhood, having that ownership and that pride of ownership, all those things that come with it. You can't really put a price on that, but in the end, we can always go back to the math. And I will say for the last year and a half, it's been the first time in my career where the rent versus buy calculation, that break-even point on ownership has been pushed out with the higher rates that we've seen, especially here in Colorado. Our taxes just went up. Our homeowners insurance just increased pretty significantly. I know it's in California, Florida is seeing similar things going on. So it's one of those where it may be a little bit more per month to own a home, but you're making deposits into the equity of your property. So even if your home didn't appreciate, even if there was zero increase in value, you're still making deposits into that account to where later on down the road, if you find yourself, if you're selling, moving, need money, need cash, things like that, you have a little bank there.
I have a story that kind of closes the loop on what you were saying. And it's why I do really believe if you're feeling that, if you have any concerns or worry about the current market in terms of affordability, in terms of prices, in terms of people saying, hey, we might be at a peak, know your market. And I say, you're not a professional, you're not a professional lender, you're not a professional realtor. So we're going to talk a little bit about picking those pros, but make sure your realtor can advise you on what's happening in your market, because we can sit here and say, what's happening in Olympia, Washington could be very different than Oahu, very different than Southern California. And there are parts of the country where the market is not super robust. So you need to have an agent that can guide you on that. But that longer term time horizon is incredibly valuable. 5+ years. I have some clients that bought in 2006. They're actually my wife's best friend. It was her parents, and they had rented for 15 years a house. And so they had figured it out over those 15 years. They'd paid $285,000 in rent, and the house was worth maybe $300,000. So they're like, this is dumb. We should not do this. So when they came to me in 2006, we all knew it was similar, where there were some signs that we could be near the top. And they said, we don't care. We've never owned a home. We've lived in the place that we rent for 15 years. We're going to be here for 15+ years. So sure enough, they bought, put 5-10% down, and the house ended up dropping 25% in value. And never once did they care. And today it's doubled in value from when they bought that. So that's not to say, oh, hey, don't worry about it, nothing bad can happen. It's to say that we can all look forward 20 years from now and say homes are going to be more expensive than they are today. I can't tell you where they're going to be in 2 years, but we can all say, just due to the effects of inflation, that over the next 20 years, that value is going to be there. So all of the benefits that Nathan talked about of homeownership, your kids, counting on growing up with the same kids, playing Little League, going to the same schools, all of the benefits of home ownership. But if you have that longer term time horizon, you don't have as much to worry about. So again, for our active duty folks, you don't get to have that choice of being there for 20 years. So it is something to take into account from that end. So as we're talking here about the beginning of the process, getting started, probably the most important is picking the people that you're going to work with. We've just talked for 30 minutes about loan related things and how your loan professional can help you 3 months, 6 months, 12 months before you ever get started. How should one go about finding a lender and determining that it's someone that can answer these questions for them? I mean, I know we all get this question. Most of us are approved in more than one state, but we can't help people in all 50 states. So if I got a friend in Michigan that wants to know, how do I find a lender? What advice do you guys have for picking your pros on the lending side?
VettedVA.com.
That's the easy button.
It is,
they've already been vetted, right?
It's not just the vetted, whatever. We have an amazing community, and Jessica stepping on who you brought it up, but you're doing a substitute teacher situation that you never come across before, right? That's what's awesome about our community, is that we have all these lenders and all these agents that are across the country that we're all dealing with, all these different scenarios. And we have this amazing group of colleagues that we can come to and get advice and learn from and find out, because there's not a single one of us that has seen everything. We are learning about how loans work all the time, because guidelines change, rules change. And I just, I give huge kudos to, Chris and Nate, what they've created, and then what this community has also helped to build this into. But there is not a group of professionals that puts more time, more energy, goes through more education, and is held to a higher standard than this group of vetted VA professionals. There's other groups trying to duplicate it, and they're doing whatever they're doing, but they don't come close. I've already seen, certain integrity issues with one of those groups, and that right there, right off the bat, just gives me that, if you start with something rotten, then it's gonna continue to be that way. And the way that Chris and Nate have built this community, and the level of the standard that they hold us to, is not like anything that I've ever experienced. I didn't serve, but I've heard from a lot of our vetted VA professionals that did serve, that Chris did kind of bring in some of that military kind of like, no, this is the standard, and that's it. It's not negotiable. We're not going to discuss it. There's not going to be any nuance about it. It is what it is. And so anyone looking for a realtor or a lender, that's where to start.
I know there are some gaps in the map where we don't have real estate agents. There's not agents everywhere. So if you find a spot that there isn't an agent listed, I always tell people to go to contact the loan officer that's listed in that state, because they probably have an agent that they work with. But if you're going to go out and find your own agent, you just definitely want to make sure that they've done VA loans before, and that they understand how the process works. How many have they done? Do they know what the minimum property requirements are for the VA? Like, do they know at least the basics of the VA loan to go to bat for you? I just think it's a disservice to our service members when they go to somebody who's, I don't want to be bashing anybody, but you go to your best friend because she just got a real estate license and she's never done a VA loan before, and she gets you a purchase and sale on a condo that you can't even get a VA financing on because it doesn't meet the VA requirements, then you're going to have a problem. So you want to make sure that you have an agent and a lender that are both very well versed in the VA loan and have done them recently, and not, I did one VA loan 5 years ago. Well, that's really great for you.
Especially on the real estate side. And you covered really well how important it is that the agent that can protect you, educate you, walk you through that piece. But almost the most valuable thing they do is that they educate the agent that's representing the seller that you end up buying from, because there is so much misinformation and myths. We hear crazy things. Oh, VA appraisals are horrible. It's actually the best appraisal program there is out there of any option, but we're told that all the time. We're told, oh, VA underwriting is so hard. You get crazy things like, oh, the VA takes forever in underwriting. The file doesn't go to VA for underwriting. So an agent that knows the program and can the exact words you use, just go to bat for you and your offer when a seller or their agent just doesn't understand that the program, and that the value and the flexibility that we have in that. So the important thing is 100% correct. We've got pretty much 50 state coverage on the loan side. And if your loan person is 150 miles away, if they're 350 miles away, it doesn't really matter. They're, the loan guidelines are what they are. They need to know the state and the closing costs, but your realtor, you can't really use a realtor from 350 miles away. So the map coverage is a little bit more difficult, but like Jessica said, reach out to a lender on the map. And I put the link to the map in the comments here, so you guys can get there and get with a lender in that area, and they can connect you with a realtor that they work with, or reach out to one of the realtors somewhere there in the state. Most of the vetted real estate pros, most realtors I know, have really big networks. And if you tell them, hey, I want to buy in this part of the state and I'm a veteran, they can help get you connected with who you need, because that knowledge and experience with the program is really important. It more so than almost any other program, just because it is powerful, flexible, and nuanced. And if you're not dealing with it day in and day out, you're just not going to know that stuff. So we've been going, guys, for about 40.
Can I mention one thing about
Yeah.
realtor and loan officer referrals? Of course, we love, like, as a loan officer, we love referring to agents that we know the VA loan and that your problem solvers work well together. But regardless, if a loan officer is referring a real estate agent, or a real estate agent's referring a loan officer, you should never feel obligated to use that person. You should be doing, asking your own questions of that person. Tell me about the last time you used a VA, client worked with a client with a VA loan. Tell me how you solved a problem recently. You don't just take a referral at face value without doing your own research, asking your own questions. And you never have to use that referral if you don't want to.
I was going to say, if you get told that you have to use somebody to work with them, that's a red flag. That's a run. Fire them both and move on.
Absolutely. So what I was saying, we've been going about 45 minutes. We like to keep these less than an hour. We've covered a lot of ground in terms of what people need to be thinking of, where to start, how to get started, how to find their pros, what prep they need to do. But before we wrap it up, why don't we just kind of go around the horn, and any additional advice that you guys have on how to get started and what someone should be doing if they're thinking of buying in the next 3 to 12 months. You want to start us off with that, Stephanie?
I would just say pick up the phone. Hopefully whoever referred you to that certain loan officer or whatever, even if it's sometimes people find you on Google, right? They Google search you and find you. But just pick up the phone and have a conversation. It's really the easiest way for us to get to know each other. It's the easiest way for, someone to guide you about what your next step would be. And I would say, if you're a service member that's PCSing, reach out to a mortgage professional as soon as you get orders. That's not too early.
It's really good advice, because we live in a day and age of the internet, whether it's YouTube videos, Facebook groups, Instagram, where people are putting a lot of information out. And the people that a lot of people that we talk to, they want to do their research. It's nice to not have to talk to a person, where you can start doing that research. But I don't know about you guys, but it's not that someone is dumb or they don't understand, but they watch a video and they think something applies to them that doesn't, either good or bad. And we're having to educate them. No, you're fine. That doesn't apply to you. Or wait, it's not quite as easy as that's going to be okay in your situation. It may or may not. So reaching out and making that call and actually talking to a person that isn't making a video or a TikTok about a generic situation. They're going to talk to you about your situation and actually ask those questions. So I really love that advice of reaching out. And I can say for all of us here in Vetted VA, but almost every loan officer I know, it's not like walking onto a car lot where they're like, hey, can I get you in a car? Can we go drive around the block? We realize it's a big purchase. A lot of times we talk to people for months, if not years, before they end up buying something. And it's just advising and guiding and building that relationship with you over the long haul. Nathan, any tips or tricks for anyone looking to enter the market?
I think this is the same tip I give every time I'm on here, but just get started as soon as you can. The second you know that that you want to buy a home, even if you are 3 years out, if you say you just enlisted, you got 5-6 years, whatever your contract is, and you're not going to do anything till afterwards, it's okay to get started now. We can build hypothetical situations. We can let you know, based on where you want to live and what you want to do, what it's going to take for you to get that house that you want. So, the sooner you can get started, it just, the easier it makes everything. There's no rush. We got time. If there's mistakes or errors that need to be corrected, just, get started as soon as you can.
Perfect. Jessica, you get the final word tonight.
A couple things we didn't mention much, but when you're looking at your finances and figuring stuff out, make sure you have a budget for yourself. Set your family budget, because just because your loan officer says you can qualify for an $800,000 house doesn't mean you should pay for the $800,000 house. Make sure you know what your family can actually truly afford. We don't know all your cell phone bills and all the other stuff that you have to pay every month, how many kids you're buying groceries for. We don't have all that information. So you are the only person that knows what your true family budget really is. And then make sure you're interviewing people when you're looking for real estate agents or lenders. Don't just go with the first person that's referred to you, because it may just be as simple as you don't get along with their personality and you don't like the way they communicate. Make sure you tell them, hey, I prefer text messages during the day. I will read emails at night. Whatever your preference is, let them know so that way they can work with you. And if they're not willing to work with you in those little things, they're probably not going to work with you in the big things either and be good with you. So just make sure it's a really good fit, because this is literally the biggest purchase you're going to make in your life, or one of them. So don't just go with whoever your Uncle Joe said that you should use for your loan. Make sure you use somebody that you actually want to work with.
No, it's great advice, because everyone doesn't mesh up with everyone. You could come across the greatest loan officer or the greatest realtor, and if it's not a personality fit where you feel open to have conversations with them, you feel happy to spend time with them either on the phone or in a car looking at houses, it's a little bit different than some other things. You do have to be able to have that relationship with them, and it's not a bad thing about them or a bad thing about you. It's just every personality doesn't mesh up perfectly. So you want to find someone who has the knowledge and expertise, but also makes a connection with you that you feel comfortable with.
That's all very foreign.
All right, guys. Hopefully it wasn't. And everyone loves you. Everyone that comes across says, that is the greatest guy I've ever talked to. I would never allow anyone else to do my loan.
You have no
So
opinions
what I was
ever.
going to say is hopefully for you guys, it wasn't as frustrating seeing my frozen face this whole video as me trying to talk to you guys with a frozen face every 12 seconds. We're going to throw this camera out the window or figure out what in the world's going on. But appreciate you guys being here. We'll be back again next Tuesday with another set of vetted pros to go through another topic of interest to you. So thanks for joining us. We will see you guys next week.